What's going on, beautiful people? It's your real estate go-to, Deontay. Here, as always, with another reaction video talking about interest rates and if they're ever going to go back down to 3%. So, as you know, with these reaction videos, we take a listen to, industry leaders, thought leaders, the experts in what they're seeing in the market. And we're taking a look at the Ramsey show, and we're going to kind of see what his opinion is in regards to if these 3% rates would ever come back. And as you guys know, we always tie it back to the Orlando area to see, because in each market is different, right? But we're going to see how these things tie up. We're going to see what his ideas are and kind of relate it to things. I haven't watched this video, so let's check it out.
Today's question comes from Mark in Wisconsin. In the current economy, what is a reasonable expectation as far as where home loan rates will end up by the end of the year? Is the 3% rate possible again, or do you think it'll stay where it's at?
I'll answer that question right now. No. No 3% rate. It's not happening. Get it out your mind. It's not happening by the end of the year. It's not happening, I would say, in the next 5 years. All right? It's not.
And looking at my numbers, it's depressing how much my mortgage payment would be after putting a lot of money down. So I'm hoping for some light at the end of the tunnel. I was listening to a thing of, I think it was like or Yahoo Finance or something today, and they're thinking they're going to raise the federal raise again in May and June. So that's the thing, Mark. I'm like, I don't know. We don't have a crystal ball. We have no idea. Is 3% rate possible by the end of the year?
No,
probably not.
Exactly.
No. Not by the end of this year.
No.
However, we need to tell you that economists and weather forecasters are the only people that can be wrong most of the time and keep their jobs. So when we predict that, it's just like, who knows? But realistically, it takes it a little while to settle back down if the bond markets settle down and if the Fed quits screwing with it. And so, you've only got about, effectively 9 months, less than that, by the time we have this conversation and all. So no, not by the end of the year. Will we ever see 3% again? Oh, maybe. I don't know. Maybe, probably. The thing you got to think about is this. In 1978, I got my real estate license. Rates went from 9 3/4 to 10 that September.
And that's what a lot of people, the past 3 years have really spoiled a lot of us, right? Because even before then, you heard a lot of people mentioning, look, rates it was common, 6, 7, 8%. Previously, and then we have a stretch of 3 to 4 years where rates are 2s and 3s, and that becomes a new norm. So it's just getting accustomed to the rates just being at that 6%, right? The payments being what they are, and if they do go down, we know now to jump on it. But we also have the history, and we know what happens when those rates goes down. So always keep that in the back of your head if you're a person who is considering waiting on the fence to get a home or not to push play on a home until the rates go down 3%. You saw what happened. Pandemonium in regards to multiple offer situations, price out of this world. So keep that in mind.
First time ever we saw double-digit interest rates. They didn't settle back down below 10. They went all the way up to 18 in 1982 under Jimmy Carter. And then they came back down, and in the 80s, I don't remember when they came back down below 10, but it was probably a decade before they came back down below 10. And honestly, I was a young real estate agent at that time, and having lived through it going up, and then it came down from 18 to 14 to 12, even to 11. When I went on the radio in I know it took more than a decade because I went on the radio in 1992, and they had not gone below 10. And I was telling people, you'll never see it below 10 again. And I said that on the radio, and I was completely wrong, right? And it went below 10, and it stayed in the 5-6 range for a long time.
You see,
2008 crash drove the rates down below 3, and they stayed in the 3 and below 3 until just the other day.
Yeah.
Until
Yeah.
Mind you, 08, 09, no one was buying houses, even though the rates were what they were, because the recession was going on. People were like holding on and surviving.
about a year ago. So the point being that there's a large percentage of the history of single-family homes prospering in the United States that the rate was much higher than 3%.
Correct.
6%, 9%, even 11 or 12%, and the market moved. The market continued to move. The only difference was they didn't have 3 to compare it to.
Yeah,
And
that
you've
we've
got-
been
you've
spoiled
got
to live
three-
in.
you've
Yeah,
got-
I mean,
You got 3 to compare it to, and it pisses
it's all
you
you've
off.
known.
Yeah, it's
Well, and
piss-
especially for the millennials that are the ones that are probably in the major,
Yeah, because-
housing to buy. Yeah, I mean, that's all we've known is
since
that.
2008. Yeah.
Yes. So, I mean, I think, and what I would say too, Mark, is when it comes to buying your home, we always say, buy a home when it's good for you, regardless of what the market's doing. So,
Thank you. How many times have you guys heard me say that? Buy the home based on your needs, your family needs, when you guys are ready. When you guys are ready. I don't care what your uncle says. I don't care what your mom says. I don't care what your dad says. Your financing, your stage in life, that is when you buy a home. Okay? That is when you buy the home. Okay? No one, like they said earlier in the video, has a crystal ball, and we can't time the market, right? So I'm glad she reiterated what I said, because I be telling you guys the truth, but sometimes if someone tells you over and over, it's like when your parents tell you something and then you hear from a friend the same thing your parents tell you, but you hear it differently from them, and they're like, oh yeah, that makes sense. So that's why I'm glad she just said what I've been saying.
so regardless of whether the stock market is like going crazy or it's down or whatever, for the most part, if you have the money and you have the ability to buy a home, then you have the ability to buy a home. And if it goes back down, you can refinance. I mean, you can always still get a better interest rates, but it is depressing. I get it. I get it.
2 points to go with my little story of perception there. Okay.
Oh, is the history lesson still going?
The history
I'm
lesson.
So sorry.
No.
I
The
interrupted.
point for the history lesson, and then I'll land the freaking plane. But the
Just circle. You're just circling.
okay,
That's great.
10%. If you were at 10% 18 months ago, and it had come down to 6 would not be depressing.
Exactly.
It's not the 6 that's depressing. It's the
Exactly.
change from 3.
Yeah.
Exactly.
That's what's depressing. And because you saw what you used to could have had, okay? And that's what throws you off. So if you bought a house at 6, you're not going to die from it. And go ahead and be pissed off and get the stupid thing paid off ASAP. And then, because my interest rate on my home is precisely 0, because I don't borrow money. So there's that. And you can save up and pay cash for a house too. That's a weird idea. Oh, that's a really weird idea. But people do it. And it's not that
People do it.
unusual. It's not as unusual as some of you think it is. So, don't tell me that, because I've seen it. I've been doing this for 30 years. I see a lot of people pay cash for a house. So just start going, okay, I'm going to save 50 grand a year. I'm going to do that for 5 years. I'm going to have 250K, and I'm going to buy my first starter house. Well, you can't get to, I know, wherever you are, I get it. But the average house price in America today is about 300. So, let's talk about how you get 300K together. Or let's talk about putting a huge down payment and then getting it paid off as soon as possible, so you don't have to be pissed off or depressed or whatever emotion it
Or
is
at all.
that's associated
Yeah.
with it. So, perception is part of the issue, the actual math's part of the issue, and then it just turn it as a positive and as a motivator to push you on out of debt.
Yeah, I liked a lot of what he said in that video, and it's spot on with what you've heard me reiterate in videos and things of that nature, right? 1, buy when you're ready to buy. 2, rates aren't going to be going down 3% no time soon. So we just have to we have to just deal with what's going on. But 3, there are plenty of solutions that you're still able to get into a home that you want. So all you guys have to do, as you know, just reach out to me, send me a direct text message, or send me a direct message, send me a text message, email me, call me, so we can put a plan in place together for you and your family to make it happen as possible. But all it takes is for us to take a look at your situation and then go from there. So as you guys know, as always, only 2 people can get you exactly what you want in real estate, okay? That's D and you. Talk soon, guys.